Canada's GDP slipped as expected in October, but there are early reports from StatsCan indicates that there was a slight rebound in November. So once again, our economy showing resilience despite the uncertainty over U.S. tariffs. Let's get more from Mark Parsons, economic researcher at ATB Economics. Mark, great to see you again. Thanks very much for joining us.
Yeah, thanks for having me, Andrew.
So October saw a decline, but fascinating that November, the economy holding in, according to the early estimates.
Yeah, I mean, look, we had that big bounce back in Q3, and we were told, hey, don't get carried away. This is just, there was a decline in imports. There's some wild trade numbers. And Q4 is looking to be pretty flat by my estimates. We had a negative 0.3, and then looks like an advanced reading of 0.1 for November. So we need actually the economy to do some work in December to get back into positive territory. So it looks pretty flat, and that's exactly what Tiff Macklem was warning about. Let's not get ahead of ourselves. The message has been more resiliency than recession, but we're still in the middle of a trade war, and Q4 is looking to be pretty flattish by my estimates.
The big story this year, of course, has been the slide in Canadian interest rates, but the Bank of Canada appears to be done for now.
Yeah, we're not expecting much from the Bank of Canada. They seem happy with where they are right now at 2.25. They're keeping a close eye on inflation, which is still a bit too high for comfort. That core inflation rate's sitting more like 2.5% to 3%. So we think they're going to be content to be on hold. The economy, as I said, has shown a little bit more resiliency than they were expecting. And still, they're still at the low end of neutral at 2.25. So they're not going to be in any rush to cut unless we see some really weak numbers. If anything, we're now starting to talk about a potential rate increase in 2026. Our forecast is that they're on hold for obviously the rest of this year, but next year as well. And then maybe looking to raise rates again in 2027.
Well, that's interesting. Of course, nothing is certain. I suppose an inflation scare could get them raising rates faster. But you think on current indications, they stand pat through 2026?
Yeah, I mean, look, the economy has been, I think, stronger than most expected. I don't see an emergency cut coming. They're still in the renegotiations on the CUSMA. So there's a lot of work to do on the trade front. But the economy's been holding in there better than I think many expected. And inflation is more or less cooperating.
You have a fascinating chart for us here, Canada's merchandise exports. And going back to the start of 2017. And we can see energy products, which are the orange line, climbing steadily, but stagnation on other goods.
Yeah, I mean, this is just the reality of our trade situation. We've had a lot of exports coming from the energy sector with transbound expansion happening. So oil shipments are increasing to the Asian markets. We see more progress with LNG Canada Phase 1 and then potentially Phase 2 and other projects. So, I mean, if you look at the MOU that was signed between Alberta and the federal government, I think this is an acknowledgement is if we're going to double non-U.S. exports over the next decade, how are we going to do it? The energy sector seems like a really good candidate. And the track record for energy is actually quite strong relative to other exports.
But isn't that disturbing in the sense that the population is in central Canada and doesn't benefit directly from energy exports?
Well, exactly. This is why we need a trade deal. I mean, you have under pressure, steel, aluminum, auto sector. I think you're going to see some really cautious investment in those industries, if not outright declines, until we get more certainty on the trade front. So those sectors are very much targeted by Trump tariffs. We need a long-term deal there before we start to see some meaningful improvement.
Let's have a look at employment because it's kind of a similar story there. And you have another great chart there. Alberta's employment surging. The rest of the country doing OK. We still have been creating jobs.
Yeah, I mean, what you see is Alberta has separated itself from the rest of the pack in the late stages of 2025. Really strong job growth since September. You had summer job losses, so it looked pretty weak over the summer, then this big bounce back. We expect that to come off a little bit because the hiring intentions aren't as strong as the employment data would suggest. But I mean, it really has become an Alberta-led story. You have over 4% year-over-year growth in November in Alberta, and about 1% in the rest of the country.
What do you think will be the surprise next year, Mark? I'm trying to guess that. Is there any iceberg out there in 2026? I know the trade talks could be very disruptive, etc. But is there anything else investors should be taking account of that they may not be?
Well, if you're looking for upside, I think the consumer could come back. The retail data hasn't been very strong. Saw retail volumes decline again. So I think you could get a little bit more from the consumer. I think, a lot of people are expecting interest rates to go down further. That's not our view. We think the Bank of Canada is close to done. Maybe once people realize that we're kind of at the bottom of the cycle for rates, they'll start getting into the housing market and get a little bit more from consumers. You have that mortgage renewal cliff happening still. So that's going to weigh on the consumer. Mm-hmm. And you have population growth slowing to a crawl. But you could, if the employment data holds up, like it has been the last few months, that's where you can get a bit of a surprise in our view.
And the productivity problem in Canada, that's going to be a long, slow fix.
Yeah, I mean, look, we got some historical revisions that made it look not as bad as we originally thought. But if you look at the data in Canada relative to the US, we are lagging quite a bit. We got to fix the productivity problem. That's a pre-Trump 2.0 problem. I think it's even more serious now that we are in a trade war. We need to get that back. And what I'm looking for next year is a rotation to business investment. Without investment, we're not going to get sustained increases in productivity. Mm-hmm. Maybe we'll get some upside from the consumer, but that's not what we're really looking for in the Canadian economy. We need a rotation of growth coming from business investment, and maybe, build, baby, build, and getting these major projects accelerated. That is, some upside for next year. Next year is all about execution on some of these promises that have been made by the federal government.
Mark, thank you very much indeed.
Thanks again for having me, Andy.
Mark Parsons, an economist at ATB Economics.